Hello traders, Greg here with the market update. Okay, so this week so far, market has just been trading the reopening of the US government. So the market, basically found out that news before the open on Monday, and risk gapped open higher on the open on Monday. And literally has not stopped going. So off to the races for risk so far this week. It's been a very bullish start to the week. Now, obviously, that's led by the usual culprits like US equities, S&P and NASDAQ. And what's interesting to note about that is that US equities did not sell off at all because of the US government shutdown. But as soon as news that the US government's going to reopen, off they go to the races and have a great rally. So it just goes to show just how bullish the sentiment is in the market that traders will use any excuse, doesn't matter what it is, to rally and to keep buying. But it's going to take a lot for them to sell. They'll do that kicking and screaming. So it's just an indication of how bullish the sentiment is. Now, gold, precious metals had a fantastic start to the week as well. Literally all risk assets rallied, but gold up $150 in the space of 2 days. Not bad. Now that's an interesting one as well because gold did rally on the US government shutdown, being a safe haven, etc. But again, it rallied on news that the US government's reopened. So a few traders were actually a bit confused, thinking maybe that would be negative for gold and gold would go down. But look, the reason that gold has had such a strong rally is that if we take you back to the last Fed meeting, Powell basically said that with the US government shut down and obviously not getting US data, that it's like driving through a fog. And when you drive through a fog, you've got to slow down. And that's one of the reasons why Powell wasn't committed to a December rate cut. So now with the US government reopening, obviously we're going to get data back, so the fog's lifted. So the market's starting to think, okay, that rate cut now in December is back on, and obviously gold loves rate cuts. So if there's any confusion why gold rallied, that's probably the best one that I have heard, for this big rally in gold so far this week. But having said that, look up towards I think 4,200, 4,180. We're going to start to see some good resistance. So I'd be very surprised if we rocket ship again, higher from these levels. So anyway, just moving along. Yes, the big key takeaway for the market now is with the US government shutdown is the fact that we are now going to start getting US data again. So last month we missed some key economic data, and that was the September non-farm payrolls, employment data. So the BLS will be releasing that shortly. Thing about that now is that yes, it is a couple of months old, so it's looking in the revision mirror. But we'll also get the October payrolls number as well. That'll probably be released shortly after those September ones. Goldman's has already come out and basically said that they expect that number to be a negative number on the headline, down probably about minus 50,000, and that was due to the government shutdown. So they are expecting that to be revised in the following month. So even though when we do get the US data back, and the key economic data, employment's one of the reasons why the Fed has cut rates and why they will cut again in December if that data is bad. But it looks as if that data may actually confuse the market instead of giving it a lot of clarity. But the bottom line is that we are going to be trading US data again, so get ready for that. And obviously inflation data for October is going to be coming up and released shortly as well. Speaking of data, the only real data that's coming out shortly here in Oz is the employment data tomorrow. Now that is expected to come out as positive, plus 20,000 for headline, and unemployment rate to go from 4.5 to 4.4%. so a touch lower, so that's good. And what it basically does show is that look, it's the employment market after that big jump in the previous month higher, that it's just cooling. That it's not really falling off a cliff, and obviously it doesn't mean that the RBA needs to run and cut rates. Not that they're going to do it anyway with what's happened with inflation, but it does show tomorrow that the employment market may be not as bad as what the market may think. And that's probably good for the Aussie as well. Aussie being a risk currency with what's happened with risk. So far this week, it's back up above 65 cents at 65.30. Obviously, if it's a good employment report, that's going to help the Aussie, so watch out for that. And just to finish up, one market that is worth watching is Bitcoin. Bitcoin, it did rally with all the rest of risk assets. It was on its knees going into the start of the week. On the weekend, it was trading around that 101, 101,000, 102,000. Had a big sell-off last week. And it did rally up to 107,000, but last night it's reversed all those gains, and now we're back down towards 102,500. So back close to that psychological 100,000 level. Obviously, if it breaks that, it's not going to be good. But the big liquidation level looks like it's around 98,000. But yes, that is one of the markets at the moment that I would keep an eye on, because obviously if it does have another sharp sell-off, it could take the rest of risk lower with it. Good luck with your trades, and we'll catch back with you shortly.